Hey guys, good morning. RB here. Hope you're enjoying your weekend. It's time to get prepped up for the next week and see, what we should be expecting from our indexes. And we're almost done with March. The seasonality is over for the weakness, and now we're getting into April. Uh, Generally has been a stronger month, but come April, we have the tariff. Problems looming on the head. So there are some headwinds on the indexes, and on April 2nd, we don't know what's going to happen, right? Whether they are going with the, reciprocal tariff announcements, or there will be deals that will be made right before then and announced, which can be bullish for the market. Uh, Thinking about all that and where we are in the overall correction pattern, let's kind of dive through, some aspects of where are the key levels, what are we expecting, where the breakout is, where the breakdown is, and what can happen, right? So, like I've always said in the past, corrections are very difficult to trade because we don't know what patterns they are gonna keep forming since they are like n number of corrections that n number of patterns that they can form, right? So it's not as simple as buying all the dips coming into demand when you're in a trending market. Right now we are in a sell the rip mode for some time, but it'll reverse, right? And we just have to be cautious that we are not going short way into the deep into the hole and get caught into some kind of a short covering there, right? So have to be very cautious on the shorts after 10% of decline for sure, but it does not mean that there cannot be a little more downsides, right? So we have to be very careful on those levels and the reactions coming out of those levels, right? So we'll talk about all that today. Mainly focusing, taking SPX as an example in this particular video, just to get an understanding, and you can of course apply the same thing on the other indexes as well, right? So now I'm just sitting right here on the monthly chart for SPX, just reiterating what I have said in the previous videos or in the previous post about the key levels, right? So looking into this monthly chart, we have made like a lower low here, below this or below this, right? So a trend is a bit changed right now, and of course it will take a little bit of time before we start going above 6,000 that the trend reverses again. But for now, this candle is still forming. We still have another week to go, so we'll see where it closes. But looking at the previous candles and the key level, we know that this is one of the key spot here, which we have talked about somewhere around the 5,400. Let me just see what was that monthly low. That was around 5,402, right? So 5,402, that remains a key level here, right? From the monthly low perspective, and below that we have this 5,126, right? So that's another low of the month coming from that August sell that we got, right? So and I don't expect that we sell right away from here directly into 5,126. That's not my expectation given how we have been holding in the last week, or what kind of patterns we are forming, and I'll go into that short-term count and the pattern as well. In my opinion, if there is more sell to come till in the next week or till April 2nd, probably this is the level at the max that should be tested, right? In case of a sell-off, right? So that's what I'm looking at for now from a larger degree perspective. And this 38% which I've marked, this is basically measured move from this particular low to the highs, right? So this is where 38% comes. And if I look into 23%, probably is 5,500. And that is where the indexes have been bouncing, right? So pretty at the spot at 5,500 we have got a bounce. So what happens when we are in a wave four, right? So if the wave four has to complete at 38% in an ABC format, I mean generally you would first bounce will come from the 23%. Well, you'll get a bounce, and then later on you can get another sell off to get to that 38%. It can do this. It can go to 5400 bounce and then come to 5126 as well, right? So these are like the common things that okay, first fib bounces and then it drops, it breaks, and then you come down to the next fib. So that's pretty common. But that's too far for now. We have to still work it out that when does this leg completes, when this A leg completes, or this is all in all is a correction for a wave four, and everything will be done just right here, right? So that's another thought which has been going on in our conversations. But again, very very early to kind of conclude that the four is done here or four will come here. A lot of these geopolitical trade war issues will play into it, and we'll have to just keep working through it till we are in this corrective mode. Whether it ends here and we start forming a wave one, two, three, four, five, something like that. But at least we'll get to know from a wave one, two formation that a trending wave is coming, and we can leverage that for the months, that it rallies. But for now, being very conservative in trades, not taking too many positions, because when we are in wave four, you'll see that stock make a move one day, goes to a critical level but never breaks out. It fails next day, right? So we keep whiplashing all through different stocks, through indexes, and making trading swings very hard, because again there is no follow through, right? So till this goes on, we still have challenges in our day-to-day trading system, right? So just kind of lower the sizes, be patient, let it come to the lower levels. Don't try to chase any breakdowns or breakouts, else you'll run into the problem. And with VIX being high, options are too expensive. I have been recommending using ETFs, so that if something goes wrong, you have a option to DCA at a lower level and still come out profitable at the end of whenever this correction is over. Like some may have been posting on X that this was the top and now we are going in a major crash back to 3036.38. I'm not there yet. I wouldn't be even calling that yet unless we start trading below 51.26. That's where my bull confidence will just go very low, because this is my big demand level here, right, on a monthly side. So until we are into this demand, which is right into my this 38%, right into this liquidity spot, or this spot as well, right, there is a chance for a new high, right? Especially at this point, I would be even having a lower confidence if it starts trading in below 5,000. That would be a big red flag, because overall it will be, if it keeps doing like something like this, right? That would be pretty bad structurally. I mean, it's too much for wave four going below. It can go till 50%. That's acceptable, but of course we'll have to have more caution if anything something like that happens in the coming weeks or months, right? But just for my audience perspective, I am not bearish in a long term. In fact, if you look into this monthly count and try to think from alternates perspective, if this was like my wave one and two, right, and this was one, two. I've marked this as a three, as a major three, but it could be still a minor three where we are doing just this right now, and things may keep stretching into late this year or maybe early into next year as well, right? So it's not that okay, this is going to be the last and then we'll have a big sell off coming off immediately, right? So there are alternates available, and if I just do this sort of account that okay, I'll finish this somewhere here in this range, or maybe make another low into 5400. I may just still go high into 64, 6500, and then correct a little bit back into the same ranges of 5500. So basically, a top, forming another wave 4 there, and then make another high into 7,000 as well. So this can keep on going, right, for some time before it actually really tops out, and some sort of decline starts to happen there. It's going to be a big decline for sure. It's coming, but are we there yet? I don't think so. I think it's going to take its own sweet time for now. Probably many months or maybe a year or so, and then we have something like this, and this is going to be years long. This is not going to be just done in few months. Maybe it may take a couple of years or maybe more to actually do a correction like this, right? Coming into this demand here between 31 and 25, right? So it's a big demand zone here on the monthly level where this whole consolidation happened, right? So it's gonna come breaking this demand as well, right? So something like this will come, but again, some people are calling that's already coming, and I'm just saying that we still have more work to be done on the upside before we actually just say that okay, the top is in, and we are just heading lower. So this is where I'm at right now. But if it starts trading any point below 5100, 5000, of course, I mean, then we have a problem. We are already into a larger correction, and I will start thinking like, okay, something like this is gonna happen over the period of time, and we are in kind of a bear market for coming years, right? 3 4 years or 2 3 years or something like that. But again, not yet, right? So that's not where I'm at. My point of view is that either it's a nested four or an actual four like this, right? So between those two, and which one to go by, it does not matter, because all what I'm looking at right now is the bottom to form somewhere in this area, and then the next rally. So once we get to that top, complete those five waves, then again it'll be time to scale out or get out of longs, and then let it correct, right? Let it correct, let more opportunities form, and then we'll see how it comes, how choppy and how corrective move that is. And then maybe probably there is another one high to go. So it takes some time to form that top on on the larger time frame. So let's not rush into calling, oh, the top is in and the bear market has started, right? So just giving some context here for those who want to be market to be into the bear market to get better opportunities at a better price available. They might just have to wait a little bit more to get confirmation or to even get into that bear market, right? So it'll happen. It'll just gonna take some time. So that's where I am on the monthly level, and just if we are doing this sub four, and if I have to kind of measure this sub four depth using Fibs, then I'll be not measuring from here. I'll be measuring from here and to the top, and you'll see the numbers are pretty much the same. That 38% does come into that particular demand level that I shared. Instead of it going down, it's probably stopping somewhere at 5261 level, right at this top of this demand, but below this 5400, right? So this is another way of looking at it, but again, like 5400 remains my primary level for the coming couple of weeks. If the bottom is not in already last week, then we have 5400 to test. Now, with that, let's just go into the shorter time frame, and looking at the different ways of how it could be resolving right here, right? So when we were looking at this particular formation, right, a very complicated one for sure, And my opinion was, I had a couple of opinions, right? So if my correction started here, right, is this is the A leg, then we have a B leg and a C leg, right? So that's one formation that we were talking about. But the other formation I was talking about was, what if my this was my A leg and this was my B and this is my C, which means wherever it ends, it either ended or it comes here. This might be just my fourth wave completing right here, right? So if that would be my case, then what we are looking at is that our rally needs to start either right from here, that we start moving up and everything will be a good news coming in April, or again, like I said, this is a very major spot. We may see some sell-off before any good news really come in, and the April, early April, whatever those market reactions to those tariff news would be, just get adjusted into moves like this drop and then up another high, making another higher low, right? So like a wave one and two formation, right? So this can cover next few weeks, a couple of weeks, 3 weeks, 4 weeks maybe, sort of an action while the dust settles down on the tariff, and we might just be in a range if this low happens, right, in the coming week, right? So this is like a weekly view on how we get up there, right? So keeping this in mind, now when you go into even smaller time scale, what I was sharing when we were talking about this ABC was that if I had this as a wave one and two, this could be three, four, and we might just have a five pending, right? So that's where I have been saying that if it does not go above the 5700 mark or 5704 or 10 around where it was trading last week, 5710, right? If we do not get a breakout, then what we are looking at is another low to come in the coming week, right? Which means this wave five. So probably if this has to come, looking at where we closed on Friday, I would want a sell-off to start immediately, because if this was one, two, then a three can start here. Or if it wants to keep, working this wave in wave four, it's fine if it goes and touches here again, but I would want it to reverse sooner than later. I do not want for this to become something like this, right? If there is a breakout and it goes above 5700 sharply, goes and closes this gap, probably touches the spot here at 5783 or higher, right? Then of course it's not wave four, right? So which means it's either making a B wave like we have talked about. Then we do not have this as 1, 2, 3, 4, 5 because there is not much of a clear count for that perspective. Then my opinion would be, if we get a 5700 breakout, then somehow we'll get into that 5860 or 5900 sort of a mark by making some waves, as in if this was an A, B, C, you might just stop out here a little bit, like this, A, B, C, and this could be just a bounce again, and then you get another dip, keeping everybody confused on what's happening. You come here again at 5600 and you make a C leg again, right? So with this, probably you'll be getting somewhere into 50 to 60% retracement of this overall drop, overall 10% drop that we got, right? So an ABC model, yeah, just getting it here into somewhere into 60%, 61%, somewhere there, first touching 50% at 5822, somewhere here, and then dropping back to 5600 and then going back to 5900. So quite a um, tough move to kind of trade in, because you go long, you'll have to just get out immediately, right here at close to the this peak here at 5785 or a little bit above, right? And then it drops again, right? Keeps you choppy, and the drops may not be simple as well, because there will be another ABC going on and then another rally going on, and after that you might just see a decline coming down here into 5800, right? So basically two cases on this shorter time frame. Just to summarize, I gave you a kind of monthly view there, but if there is a breakout next week, from 5700, and this is a complicated four that's going to keep on going. The most confusing part would be that people will start thinking this as a wave one, two, and start marking 161% up. We'll have to see if we are able to get above these key points, right? If the news is supporting it, if the catalyst is there, right, that this can become a new wave going on, and everything is already ended. That would be, amazing. But again, we cannot assume that as of now, and we'll have to take all these pivots, and see what kind of reaction we are getting. If there are hard sell-offs coming from any of these pivot points, which means it's not a wave three, and it's potentially just doing a wave C of some sort, that okay, it hardly goes there, either rejects from here or goes here into this point and rejects from 50%, and then it retraces another 60% from here. If you see from this top, again, points straightly right into that 61% range, right? So somewhere here. And then pops again. So a B wave, or you can call it as a bear flag, something like that, right? So a bear flag formation, and then you have another C down, right? So one way of doing a corrective move for maybe a couple of months, or the other one which I explained before was that if we are not able to get above this 5700 mark, then we are gonna see an sell off immediately, and we want a low below 5500. May or may not be exactly 5400. It'll be great if it does that. If it doesn't, it could just make another 20-30 points lower than that, and call it a day, and the bulls step in, because we have a demand right here, which was tested partially, or got close to last time. I might just go in there and just pop, right? So it doesn't have to go all the way to test the liquidity below this. If it does, it will be nice. You want to see a nice bounce sort of coming out of it, and we can say, okay, here we have a shorter term bottom. Again, we will be looking at going somewhere into the 50 to 60% retracement right up here before we start concluding that the bottom is in. We want to see the formation which comes out from wave like this from the bottom. Is it like again another chop move, something like this, or do we get like a big five wave formation from there, something like that, right? So once you get this five wave formation, a very clear one, right, then our expectation, of course, is that we will get a drop back into somewhere into this demand with an ABC. So you will have an opportunity to buy and go along once you see this high volume move on wave A, and a low volume wave one, and a low volume pullback into back into these demand areas. So this is going to be a little tougher. Like I said, corrections take a lot of patterns and takes a lot of time to come out of them as well. So we'll have to keep working through it. Don't be into a rush that you have to go all in because this may not come again, or this number may not show up again. Even if you, let's say, miss going long here at 5400, you'll have an opportunity to go along again after some time in a range closer to that, right? So market always gives you an opportunity to you know get into the lower range than trying to chase a breakout. And that's what most people do, and we don't want to do that. You don't want to buy the lows. You feel it risky. That's fine. You can let the structural change happen. You can see how the new waves are going. You may build more confidence because as things are improving, you'll see all news kind of aligning to that, and all catalysts aligning to that, and then just one pullback to buy the dip and then move on, right? So many ways to deal with this, many ways it can still unfold, and there is no single way you can point other than going by from level to level, that okay, if it goes from 5710, next time looking at a test of 5782, potentially a test of 5822, and the 5860 or so, right? So you have to go level by level at this point until you form the first structure. Once we get the first structure, whatever it looks like, we will be able to say, hey, this is a B wave, right? Just doing an ABC and a new low will come, or this is an impulsive move enough and the lows were already in. Let's just be ready to get that dip of a wave two and just buy and let it go to 6350, right? So these are the few things which I wanted to cover. Hope this you know gives you an idea on where you want to step in. This may not matter if you're a scalper and you're looking at 3 minutes chart, 5 minutes chart, and just trying to trade level to level, but some people who really want to go long at the lower ranges, 5400 from my perspective has a very high risk reward. I've been adding since like 5800, 5900. I've added at 5500 as well. My average right now is somewhere around 5700, or a little bit above 5730 or so. And I'm ready to buy more at 5400 to even average it lower, right? And my intention is to at least let it go into 5860, 5900, and then decide what kind of formation it has formed, and probably exit my longs there. Look back into the dip again, whether it's going to be a new low below 5400 at 52 or 5100, or we'll get like I said, a higher low if we get five waves up from here, right from here, and then buy again at 5560 or somewhere around that number, right? We'll figure that out, but just make up your mind, just to make up your mind where you want to enter, where longs make sense. Hope this kind of helps you out with that. Thank you very much, and good luck. See you again. Thank you.